Blake here. As always, none of this is financial advice. Trade and invest at your own risk. Look, this week is going to be a shorter video. Not much has changed since last week. Looking at the higher time frames, the monthly, you can see we are still in a downtrend on the monthly, but bounced at key 50 month moving average at the bottom of this cloud. And we are still closing below the top of this, so technically still in a downtrend on the monthly time frame, but holding key support. Weekly time frame in an uptrend, but we do still have overhead resistance. And then finally, again, as we zoom in on our primary time frame, the daily, I mentioned this has been constructive. We are in an 11-day uptrend, still trading above the cloud, but we do have some significant resistance at the 200-day moving average. That's right around 405 still on SPY. So right here, this is not an area where I would typically be pressing. This is an area where I'm lightening up. We've had an interesting year, to say the least. It's been a bear market. And so, we've already had 3 good uptrends this year. I would consider this 4th one still a good uptrend. We've been paid. We didn't get stopped out when we gapped up back here on November 10th. So right here, not a great area to be pressing long market exposure. We still have an environment where we have quantitative tightening and macro triggers are still leading the fluctuation in price, in my opinion. So until we start to see more dovish approach from the Fed, I'm not expecting this to be the bottom. So nearing this 200-day moving average, not where I would typically be pressing in the current market. All right, so yeah, this week we still have some leaders. What has been leading? Well, one thing that's been leading is the Dow Jones. So the Dow Jones is actually showing relative strength among all of the indexes. And you can see breaking above the longer-term downtrend line, bull flag, and then these past few days continuing to print higher prices. So this level back that we printed on August 16th, the high was 343.09. So if we can close above that this month, that's going to be a positive monthly signal for the Dow Jones. So if we look at this monthly, you can see, very strong bounce off, this bottom of this cloud and entering uptrend on the monthly. So definitely need to be paying close attention to this. This does look constructive and has been leading the way back up. So, we've seen banks, we've seen energy kind of lead this rally. Is it going to lead next year? I don't know. But it has been leading so far. So we're definitely going to be paying a little bit more attention to the industrials. Also, a sector that I'm liking is healthcare. So XLV. Yeah, XLV also showing really good relative strength, even on the higher time frames. We zoom out, look at the monthly, you can see still holding an uptrend on the monthly time frame. So that's a great signal. Weekly as well, continuing to move higher above the cloud. And so, we're definitely going to be taking a look at how we're allocated in the investment portfolio rolling into next year. Energy has been such a great trade for us, but we still can't seem to get back above this 94, 95 level that we had highlighted. So until we can get back above that, we're still kind of stalling out, getting a little more volatile near this, previous high. So pay close attention to energy. If we start to see oil have some more dramatic moves to the downside, I think that would negatively impact, obviously, the energy sector. So definitely we'll probably be taking a look at that as well in the investment portfolio heading into 2022. And then also biotechs. Biotechs as well are looking really solid. You can tell we've had a trade on this. You can see how well it nicely traded with our previous levels, and then coincided with this anchored VWAP from the all-time high. So this anchored VWAP proving to be resistance, but if we can get back above that, I think it could be constructive as well for biotech. So yeah, keep a close eye on the sector as well. We'll be monitoring that. And then finally, let's take a look at tech. Tech has been lagging. I mentioned that, hey, if we go into a prolonged uptrend, I could see this playing catch up. Hasn't done that. Okay, so we still see technology lagging, and the movement has been in the boring stocks, the boring sectors. So until we start to see price strength confirmation and start to see more bids on the FANG stocks that we like to see, yeah, I'm not expecting too much right now from technology. And lastly, one more thing. Got to take a look at bonds. Okay, so we've seen a really strong move off these lows in the TLT, kind of bull flagged right around this 50-day moving average, and then gapped higher, and then had an inside day on Friday. So you can see bull flag, gap higher, and then Friday just inside day. So if we can get back above these Thursdays high, that once again price strength confirmation could be an interesting trade. Still not a huge fan of trying to trade bonds right now, but I would expect to see higher prices in equities if we can see a bid in the bond market. Just to wrap it up, once again, I'm not pressing here. You can see we've been trading within this flag and back to the top of that range, but we do have significant resistance right around that 405 area on SPY. Not pressing into this year, and we will be reevaluating the investment portfolio. All right, see you on the open.